Greetings, fellow fashion enthusiasts and stock market aficionados. Welcome to Stocks Telegraph. Today, we're turning our spotlight onto a familiar name in the retail world, Gap Incorporated, trading under the ticker GPS. Now, Gap has experienced its share of ups and downs over the years, but recent news has investors buzzing with excitement. Shares of Gap skyrocketed a staggering 28% on Friday after the company announced a positive update on their full-year sales outlook. This surge marks Gap's biggest one-day percentage gain since November and adds to an already impressive year for the stock. So far in 2024, GPS has climbed over 37%, building upon a remarkable 85% growth in 2023. These numbers paint a picture of a company potentially undergoing a remarkable turnaround. But is this just a temporary blip? Or is Gap truly on the path to a sustainable resurgence? Let's dive deeper and explore the factors behind this recent surge and see if Gap can maintain its upward trajectory. Before we delve into the details, we want to hear from you. Are you surprised by Gap's recent stock price surge? What are some of the challenges facing the retail industry in today's market? Leave a comment below and share your thoughts. In the next segment, we'll unpack Gap's recent financial performance and the news that sent their stock price soaring. Stay tuned. Let's take a look at Gap's current price of $28.96. This sits comfortably above its 200-day simple moving average of 60.88, indicating an upward trend. Furthermore, Gap's performance over the past year has been nothing short of phenomenal. The stock boasts an impressive 261.10% growth over the last 12 months and a noteworthy 46.04% gain in just the last month. These figures suggest strong momentum and a potential shift in investor sentiment. But financial performance goes beyond just stock price. Let's delve deeper and explore Gap's earnings. Here, we see a truly remarkable statistic, a staggering 940.12% growth in quarterly earnings. This explosive growth signifies a company that's not just surviving, but thriving. While such a high percentage might be due to a low baseline in the previous quarter, it still indicates a significant turnaround in profitability. Another interesting data point is Gap's insider ownership. With a healthy 40.80% ownership stake held by insiders, it suggests that those closest to the company believe in its future. This alignment of interest between company leadership and investors can be a positive sign, indicating a commitment to long-term value creation. For the 3 months ending May 4th, Gap delivered a quarter that exceeded analyst expectations across the board. Their earnings per diluted share of 41 cents absolutely crushed analyst estimates of a mere 14 cents. This translates to a phenomenal 940.12% growth compared to the same quarter last year, a number we mentioned earlier but deserves emphasis. Gap's sales figures were equally impressive. They reported sales of $3.39 billion, exceeding expectations of $3.29 billion and representing a 3% growth year over year. This growth might seem modest, but it becomes significant when compared to a decline in sales experienced during the same period last year. But the real story lies in comparable store sales, a key metric that reflects sales at stores open for at least a year. Here, Gap delivered a stellar 3% increase, a remarkable turnaround from a 4% decline in the previous year's corresponding quarter. This positive growth was driven by strong performance across all 4 of Gap's brands: Old Navy, Gap, Banana Republic, and Athleta. This brand-wide momentum suggests a company that's successfully revitalized its product offerings and reconnected with its customer base. Gap's confidence in their future prospects is further underscored by their revised full-year guidance. They now anticipate a slight increase in net sales for the year, an improvement on their previous flat sales forecast. This upward revision reflects their optimism about continued growth. Furthermore, they've significantly raised their full-year operating income outlook, projecting growth in the mid-40% range, a substantial increase from their earlier forecast of low to mid-teens growth. This revised guidance demonstrates a company with renewed confidence in its ability to deliver strong financial performance. Gap's CEO, Richard Dickson, isn't shy about his enthusiasm for the company's future. Following the impressive quarterly results, Dickson expressed strong confidence in both the current quarter and the full year ahead. This confidence is reflected in their revised full-year guidance, which projects growth in both revenue and operating margin. Dickson's leadership and his ambitious turnaround plan, which focuses on operational efficiency and brand revitalization, seem to be paying off. This leadership and vision are crucial elements for Gap's continued success. Technically speaking, the recent stock chart paints a bullish picture. The formation of a golden cross pattern, where the 50-day moving average crosses above the 200-day moving average, is a classic technical indicator often associated with a sustained upward trend. Furthermore, the recent rally towards the 50-day moving average suggests strong investor confidence leading into the earnings report. However, it's important to remember that technical indicators are not foolproof, and market conditions can change rapidly. As Gap's stock price climbs, it's important to consider potential resistance levels. Analysts suggest that the $28.50 level could present some overhead resistance, as it coincides with the March 2024 high. The stock price reached this level, and it might encounter some selling pressure. However, a breakout above this resistance could lead to further gains. Gap's recent financial performance is undeniable, exceeding analyst expectations across the board, showcasing revitalized brands, and revising full-year guidance upwards all paint a picture of a company on the mend. CEO Richard Dickson's leadership and turnaround plan seem to be taking hold, and investor confidence is soaring. Technically, the formation of a golden cross and the recent stock rally add to the bullish sentiment. However, challenges remain. The retail industry is fiercely competitive, and Gap must navigate ongoing economic uncertainties. The $28.50 resistance level could pose a hurdle, and the long-term sustainability of their turnaround strategy necessitates continued execution. Whether or not Gap is a worthy addition to your portfolio depends on your individual risk tolerance and investment goals. Their recent performance is encouraging, but the long-term trajectory remains to be seen. Carefully consider the potential rewards and risks before making any investment decisions. The future of Gap is a story waiting to unfold. We want to hear from you. Do you believe Gap can sustain its turnaround? What are some of the key factors that will influence their future success? Leave a comment below and share your thoughts. Thanks for joining us on Stocks Telegraph. If you enjoyed this analysis, don't forget to like and subscribe for more in-depth explorations of exciting investment opportunities. Until next time, happy investing.